Well, hey, ladies and gentlemen, fellow investors, I'm glad you've joined me today. How you doing? Hopefully you're having a good day or good evening or afternoon, whenever you're choosing to listen to this week's podcast. Hope you're doing great. And as we really start heading towards the peak of summer and summer season here, it's good to be with you and good to be sharing this information I'm going to be going over with you today on the podcast. So I'm pumped up to give this information to you so you can start using it and using it right away. A couple real quick housekeeping items before I start getting into my low-risk real estate investment formulas that I want to go over with you today. Number one, you're going to hear maybe a little bit of a buzz or noise in the background once in a while. They're doing some construction next door to our office today, and as much as we try to get away from the noise, we're just not going to totally get away from it. So you're going to hear a little bit of that in the background. So I appreciate you putting up with that. So thank you for that. Secondly, you're going to start getting information here pretty soon if you haven't already. We do have our window opening here in a couple of weeks for participation in our flagship fund. So keep a lookout in your email box for that. Especially based on what I'm going to be talking about today, you're going to be you will be interested in looking into that further, at least checking it out. So that window is going to be opening in a couple of weeks, and that window is only open for a month. And then you would not have an opportunity to get involved in the fund actually until next year. So keep a lookout and keep your eyes open for that in your email box, because you have some information coming regarding that. And then there are also a couple of other investment projects outside of the flagship fund that I am working on right now. I don't have them totally buttoned up yet in terms of information, but they will be the kind of projects that I feel worthy for investors like yourself to consider. And so keep your eyes open in your email box, on information coming on those here. Probably within the next, I'd say the next couple of weeks, you'll be seeing something. So I think that pretty much covers my housekeeping items I wanted to go over with you today. And so let's jump into two low-risk real estate investment formulas. And this really needs to be, in my opinion, moved up your priority list in terms of your investments. And I really don't care what your favorite investment is. If it's real estate, great, and if it's not, fine. But I think no matter what I'm going to go over today, I think you really need to raise up the information I'm going to give you up your investment list, I guess I'd call your priority list for your investments, I guess would be a better way to put it. Not because mainly of what's going on out in our world today. I'm talking politically, economically, and socially. Those three forces, combined with the ability for hackers to get into our personal lives quite easily, by the way, especially when it comes to our investments, I think is a big reason. And then also because many conventional investments anymore, most all of them, are so interconnected, it's actually pretty dangerous, I think, for a lot of investors, and I think many of them don't even know it. So I'm not going to get that deep into the subject matter today with my two low-risk real estate investment formulas, but just as kind of a precursor of what I'm talking about, you're really going to want to pay attention to what I'm going to tell you based on these things that are going on, and they're obviously going on. If what I've said to you is not resonating at all, you've been living in a cave for the last 5 years, because you can't go an hour without something in regards to what I've just mentioned in any of those kind of categories coming up. And it's going to get worse, not better, folks. So with that said, let's jump into the real estate formulas, the low-risk formulas. And here's the good news about the formulas, by the way. They are not anything that is really like a formula you'd see your physics instructor, your calculus instructor, putting on the board, putting into a PowerPoint presentation, putting on an overhead. So it's not, P arrow Q divided by X times Y over the square root of, so it's not anything like that. So that's the good news. The other part of the good news is it is really easy to remember what I'm going to tell you, because I think this is where, bottom line, the money is going to be made over the next 10 years, and it's going to be made with super, super low risk for the investors that decide to really get serious about this over the next 5 to 10 years. That's what I think. And so let's go over formula number one. Low risk real estate formula number one. It's pretty darn simple. And that is to locate well-maintained, well-managed, and well-located apartment properties to own. Okay? Whether that's in your own marketplace, whether that's in another marketplace, you would be smart right now to really ramp up the priority of your investing to well-located, well-maintained, well-managed apartment properties in your market or in other markets that are where people want to live and look forward to living. And by the way, the bigger the better. The bigger the better. A lot of times, and that sounds counterintuitive when I say that, because a lot of times people think, well, shouldn't I look for like a 2-unit or a 4-unit property? Maybe if I want to own and run it myself, or even if I want it managed, shouldn't I start out small and maybe grow from there? And logically that makes sense, right? You think, oh yeah, you start small and continue to grow, but not now. It doesn't. And by the way, if you would decide to go that route, you're going to be fine. So I'm not saying that that's the wrong thing to do. I'm just saying the more profitable thing to do is get into the largest apartment property you possibly can, whether it's on your own, whether it's maybe getting involved in one of our funds, one of our upcoming larger apartment properties, your own backyard, my backyard, another backyard. As long as you follow the criteria that I've just given you, you'd be really, really smart to look for those and to park as much money as you comfortably can in those kind of investments. And look, here's what's going on. More and more people, and you're starting to see the writing on the wall now, and it's going to be all over the news soon. And by soon, I mean within the next probably 12 to 24 months. You have more and more investors. And when I talk about investors, I'm not just talking about folks like you and I. I'm talking institutional. I'm talking companies, partnerships, etc. Are looking for places to invest their money that is insulated from outside, unrelated investment events. What do I mean by that? Unrelated investment events are political, social, and economic events that happen that affect the value within the hour of conventional investments. Okay? And so if you have any money in the stock market right now, which is at a record high, by the way, you know this to be true. Your investment in whatever company or companies goes up and down for the most part at such a ridiculous pace. You're lucky to get sleep at night. And by the way, it goes up based on reaction to news and events that in most cases have nothing to do with how the investment or the company is doing. That's the scary part. That's the scary part. And so right now what's in the news is North Korea, right? How many how much value has been lost in many, many businesses over the last week because of the rhetoric going on between the U.S. and North Korea and their missiles. A ton. Now, what does that have to do with the companies that you're invested in? For most of you, for most of your investments that you have maybe in stocks, mutual funds, bonds, etc., nothing. Absolutely nothing. And you see this happening now with regularity. And so, and it's not just limited to small things. I mean, large global things, excuse me. It also comes down to smaller local things too. When you have terror attacks, when you have, especially now that they happen so very often, you will have companies that will gain or lose value based on some kind of terrorist attack, whether it's local, and by local I mean within the U.S. borders, or some other place. And there are a host of other reasons, that other things that happen that have nothing to do with your investment, but your investment is affected by it. And absolutely really makes me mad. It gets me frustrated because I have a fair amount of money in conventional investments. I have cash in mutual funds, and some stocks, and nothing bothers me more than to see the values of those things jump all over the place. For what reason? Well, because some dummy in some country decides he's going to tell the U.S. that he's going to point his missiles at Guam, and all of a sudden my investment loses money. How does that happen? It has nothing to do with the money I've got invested in Sherwin-Williams paints. I mean, they're still selling paint, aren't they? People are still buying paint, but evidently because there's bad news locally, internationally, it affects the stock price of a painting of a company that sells paint. It's crazy. It's crazy. But because investments, conventional investments, are so interconnected anymore, what happens over here has an effect with an investment that over there, because they're so interconnected. And a lot of it has to do with technology. And by the way, I love technology for a lot of reasons, but this is one reason I hate it, is because my investment could tank in an hour because of how it's connected to something totally unrelated in some other place, local, national, international, doesn't matter. And so when you think about owning a well-located, well-maintained apartment property, you're pretty much isolated from all of that stuff. Nothing is going to happen with the value of an apartment property based on what North Korea decides to do or not do, based on what President Trump decides to do, based on a terror attack, based on good news or bad news economically, locally, globally, nationally, it doesn't matter. The apartment property's value is not going to jump up and down 20 to 30% within a month's period of time. It's not. And here's the other thing. No matter what happens, tenants are still going to pay rent. I mean, they're still going to pay rent. And so no matter what political, social, or economic event happens in some other area within our borders, out of our borders, residents still need a place to live, still need a roof over their head, and still need to pay rent. So that's pretty predictable. And more investors, and you're seeing the writing on the wall now, and I'm seeing it in the marketplace now, based on what apartment properties are selling for, based on the demand from the investment community for apartments. It's all based on, I shouldn't say all, but a lot of it now is based on, we need to find a place to park our money so we don't have to deal with all this crap that's going on, all of the drama, all of the ups and downs. We don't want to deal with that. We want something that's pretty predictable, that's insulated from a lot of these unrelated investment events, so we can talk to ourselves, we can talk to our shareholders, we can talk to our partners, and know what's going to be happening and what they can expect. Okay? You can't say that with most conventional investments. Exceptions would be maybe a bank savings account, maybe a money market account or a CD. However, you've got another problem, and that's technology and the ability for hackers to hack into anything anymore. So the recent WannaCry virus is a good example of hundreds of businesses around the globe being shut down by one computer hacker hacking into their systems and shutting their businesses down and causing all sorts of chaos. I just read this morning, and I'm going to be sending you guys copies of these articles. Two well-known businesses were hacked over the week, just over this last week, and records were stolen, information stolen, and that's not counting any financial losses or money being stolen. And so, if you think your bank CD or your savings account or your money market account is safe, you better think again, because it's all connected to a computer somewhere, which is all connected to the internet, which people can hack pretty easily. I mean, if they can hack into these businesses that spend millions of dollars a year to prevent it, they can get into your savings account pretty darn easy. Don't think they can't. Okay? And so all of these things are starting to come to a head. Now, you haven't seen a lot of news about this. You haven't seen a lot of information about this. Maybe a little bit here or a little bit there, but you're going to start seeing it. You're going to start seeing it more and more, and it's going to be coming up more and more. And you're going to, hey, wait, Darin talked about that. Hey, you're going to read something in the not too distant future, I'm telling you. And oh, Darin talked about that. I remember hearing this on Darin's podcast. And look, I don't ever claim to be any kind of predictor of anything in the future. I don't have a crystal ball, and I don't ever pretend to. But I'm telling you, this is coming. So, not only for the sake of your own investments and the safety of those investments and the insulation I think that's required anymore for those investments, I think you need to be thinking about well-located, well-maintained apartment properties because they're pretty much insulated from all of this. Nobody can hack into an apartment building. They can't hack into our apartments that we own now, apartments that we own in the future, because nothing's going to hack into those buildings. Nobody's going to hack into that at all. They are insulated from technology, thank goodness, by the way, and insulated from all of those unrelated outside investment events. We know this. Some people know it. More and more will know it, and they will be directing and moving their money to these investments. Watch and see. It's going to happen. So you want to be there with apartment properties, well-located, well-maintained apartment properties for that reason. Here's the other reason. The line of tenants wanting to rent apartments is going to continue to get longer and longer. Two main reasons. Number one, affordability. The cost of living is going up at a torrid pace compared to wages. Okay? So it costs a heck of a lot more money to basically go through your daily cares of life, and it's going to get worse for people compared to the speed at which wages are rising. Okay? So what does that translate into? Longer lines of people deciding and choosing they want to rent. The other part of that is the ability for anyone to obtain a loan to buy a home or condo anymore is absolutely ridiculous in terms of what's required, the information that's needed, and the qualification process to go through. It's an absolute joke. If you've done it recently, you know what I'm talking about. I mean, they may as well take a blood test, have you pee in a cup, and go through all of that for them to make a decision whether they're going to make you a loan or not. A lot of people don't want to go through that anymore. A lot of people can't because they can't qualify. And frankly, a lot of people don't want to spend the time doing it. And the third part of it is flexibility. The thought that the home is the single greatest wealth generator, safe haven for investment anymore is now gone. It's over. It's done. The majority of people don't see the home as that anymore because it isn't. And so the days of people being able to buy a home and have it increase in value year after year after year, and they could live there for 40 years, 50 years, sell it, and have a bunch of money in equity that they can retire on and depend on, that's gone. That's gone. Now, don't get me wrong. Am I saying that people aren't buying houses or condos? No, they are. Am I saying that people won't, in the future, people will not buy houses or condos? No, I'm not saying that at all. Heck, I went by 3 or 4 developments this morning on my way into the office. Okay, this is, it's happening. But the numbers have shifted so dramatically, folks, and they're going to continue to shift dramatically, that the line of people choosing, wanting to rent versus own is going to continue to get longer and longer and longer, which is going to drive up demand for apartments, which is going to drive up the rents, which is going to drive up the income streams that the properties produce, which is going to drive up the values of the properties. It's going to happen, and it's happening right now. You're just not hearing a lot about it yet, but you will. You will. And it's kind of sad because, the days of dad going to work, having the same job for 35 or 40 years, supporting the family, the entire family, is now pretty much gone for most people. Not for everybody, but for most people. Now, everybody in the family's got to work, pretty much. And they're all working pretty much full time, and they're barely making enough money to pay all the bills and maybe have a little bit of fun, a little entertainment here and there. That's really about it for most people. And it's sad. I don't like it at all. But this is where we're going. And this is why apartments, well-located, well-maintained, well-managed apartments really, really need to be on the top of your priority list. Especially now, with all of those reasons, especially now. So that's my first low-risk real estate investment formula. Okay, so what's my second one? Well, this is not going to be a surprise, so I want you to think to yourself, what is most related to apartment renting apartments? What investment would be most related to investing in apartments? Okay, if you think about it, the conversation in your mind would probably at least come up with self-storage facilities or storage garage facilities. And that's the second low-risk real estate investment formula, is to be looking for getting involved in owning self-storage facilities. Well-located, well-maintained self-storage facilities. Again, the bigger, the better. Here's the bottom line, folks. Remember that long line of people wanting to rent apartments that I was talking about that's continuing to grow? Well, guess what? There's not enough room in their 750 square foot, 2-bedroom, bath and a half apartment to put all their crap. There's not enough room to store their stuff. And that doesn't count any hobbies that maybe these people have. Maybe they like to work on cars. Maybe they're a car collector. Maybe they've got another hobby that requires more space to store and put their stuff. They need a place to put all their crap. And this is going to continue to be the case as we go through the next 5 or 10 years. And so storage facilities are going to be a big deal. Just to give you an idea, we have more people wanting to rent our storage facilities, our storage garages, than we've got garages to rent. And that's going to continue to be the case. People are going to need to find a place to store and put their junk so they know where it's at, obviously, but also to get access to it, but mainly because there's not enough room where they're living in order to do that. And so you would be smart, and it would be low risk to be looking for opportunities to invest in a self-storage facility. Again, in your backyard, my backyard, somewhere, I mean, you'd be smart. Because that's where the growth is going to happen, because people are going to need places to put all their stuff. And again, like apartments, you see this happening right now. You don't hear a lot about it, but you will. You will hear more and more about it. And so those two items, in that order, are my low-risk real estate investment formulas right now. That I think if you're smart, you're thinking about ways to move those up your priority list, and I would even dare say change your thinking, your philosophy on investing right now, because this is where you're going to see the most growth, the bigger opportunity to make money, and this is where the focus of the investment world is going to really start turning more and more and more. You're seeing it a little bit. You're going to continue to see it even more as the years go by. Okay, so well-located, well-maintained apartment properties, self-storage facilities. Again, here's the good news. This isn't confusing. This isn't hard to figure this out. This is what's happening. And so keep your antennas up. Look around. Pay attention to what I'm saying in your own marketplace, where you live, with what's going on. Keep your antenna up, and you will see. You will see that what I'm talking about is taking place, or at least starting to take place. Keep your antennas up. And when you can, and if and when you can, take advantage of it. Okay? So that's going to do it for this week's podcast. Again, as always, I'd love to hear from you. You guys know how to get a hold of me. You've got all of my contact information. I'm always interested in your comments, your thoughts, your feedback, any information you've got. You know how to connect with me. So connect with me. Would be happy to have a dialogue with you about what I've talked about. And if you've got anything that you think you would add in terms of add any value to what I've talked about, I would absolutely like to hear from you. All right, folks, I'm glad you joined me today. I'm glad you took the time out to listen, and make it a great day. Make it a great week, and I'll be talking with you soon, I'm sure. All right, we'll see you, everybody. Take care. Bye-bye.